Hi everyone, this is Michael Kramer of Mock Capital. Today is Tuesday, July 23rd, and it is around 4:30 New York time. So the economic calendar here in the US has been fairly quiet the last couple of days. That's expected to change though starting tomorrow when we get S&P Global preliminary PMI readings for the month of July. Then, of course, on Thursday, we'll be getting GDP. Second quarter GDP is expected to grow by a 2.0% annualized rate. Of course, then on Friday, we're going to be getting the PCE report. PCE month over month expected to rise by just 0.1% versus last month's reading of 0.0. Year over year expected to come in at 2.4 versus last month's 2.6. Core PCE expected to rise by 0.2%, up from 0.1. Core PCE year over year 2.5, down from 2.6. We'll also be getting University of Michigan final numbers. And then next week, we're going to start getting a lot of the usual job reports we get the first week of the new month. And so right now, we haven't really been seeing a lot in the market due to U.S. macro forces really influencing things. The one thing that I thought we would start off with today was the Japanese yen, just because we have started to see the U.S. dollar weakening versus the Japanese yen. It's actually fallen below a significant uptrend that started back here at basically the beginning of the year, and we've tested this level one other time, and now we've clearly and pretty decisively have broken below it. So at this point, we're keeping an eye on the yen. We can see that it's getting to these oversold-ish areas. The last time this happened was back here at the middle of July, and we bounced around for a couple of days, and now you can see we're making another move lower. And so again, this area between 154 and I think 155 really holds a lot of significance, because after support really at this 154 area breaks, you can see the next area of major support doesn't really come again until you get into this 151 area. It's also important to note that you're not only seeing it strengthening versus the dollar, you can see that the AUD JPY is also moving down sharply. And this has been a significant break as well. There was an uptrend broken here. You can see we're sitting on support right here at this 102, 103 region with a break here, potentially setting up a further decline to around 100.75. And we're also seeing the same thing happening in the euro with another major break of a trend line. And what we're really seeing here is a broadening across markets in the strengthening of the yen. And so this is really important because there's obviously lots of carry trades that go on with the yen across many different asset classes. And if we continue to see the yen strengthen like this, it could be a sign that there's something happening perhaps a little bit deeper beneath the surface that may not be completely visible to us. Clearly, the BOJ meeting is coming up next week, and clearly there's fear of intervention from the monetary authorities over there. So there's a lot of reason to see this type of strengthening in the yen, but it is notable that this appears to be some sort of, at least as of right now, some sort of trend reversal. And we're going to have to pay very close attention to this because of the broader impacts it can have across the market. When we look quickly at the euro versus the US dollar, it looked like the euro was trying to break out. And again, the euro is kind of coming back in. This has been a very difficult currency to try to forecast on a week-by-week basis, it feels like, because every time it looks like it's getting ready to make a move higher or a move lower, it seems to backtrack back and fill. And it really kind of tells you that we're just in some sort of corrective consolidation pattern. We really can't seem to get anything really going in the euro in either direction. I would be looking for the next area of support somewhere around this 108 area down in here, with the area below that around 107. Which has been holding that trend line now, which has been the trend line now for some time. Pound versus dollar. This has made a clean breakout. We did get up to this 130 region. We were talking about this last week. We actually were able to advance even a little bit further. We found some resistance around this 130.5 area. And now we're backing off just a little bit. I think the pound just basically got overbought with the RSI up over 70 and above the upper Bollinger Bands. This just looks like some consolidation taking place. Right now, we're finding support on the 10-day exponential moving average. So as long as that 10-day exponential moving average holds, I think you look for to go higher. If it breaks, I would look for a decline back to support around 127.85. When we look at copper, it continues to decline. The next area we're watching for copper right now is right here at this 408 region. There was clearly a big breakout that came when we got above that area. We have broken support right now at this 421. Right now we're approaching another potential minor support region around 413, but you can see we're not quite really there yet with a completely sort of washed out feeling oversold condition. We're kind of just grinding along the lower Bollinger Band. RSI still above 30. We really want to see this RSI get below 30 and for some sort of capitulation type of move down, sharp move down in the copper to really get some more confidence that maybe there's a turn higher coming. That may not come really though until we get down to this 4 handle on copper overall. When we look at gold, last week we were talking about gold and we were talking about it potentially moving lower, and it actually moved higher. So we can see that did happen. We have pulled back some and we're back to this area and here. We're also seeing that we're back below the 10-day exponential moving average, closed below it now 3 days in a row. Again, this has been a pretty good indicator for where gold is going. I think at this point, we clearly had a move higher, which I wasn't really expecting to see. But overall, I still tend to think that you're likely to see gold come back and retrace to some of these lower levels. And I would just use the 10-day exponential moving average for a validation or invalidation of this of the trend that you're likely to see there. Also, when we look at the DAX, notice that the DAX today got up to around 18,620. This has been an area of resistance now for some time. Back in here, it tested it here a couple times. We briefly got above it on July 12th, and then we gave it all back last week. Got there today, weren't able to get through it. So this is certainly an important area that we're going to want to continue to pay attention to. The other thing that's interesting is that right now, this looks like it could just be a retracement because we got up to the 78.6% retracement level, and that's where we also failed. So this area in here is providing a lot of resistance for the DAX, and if we were to move down and start moving down from here, it wouldn't be surprising considering what we're seeing here. Obviously, if we break through resistance at 18,620, it would open the door to a much bigger move back up towards 19,000 or so. Meanwhile, the FTSE has just been zigzagging the last few weeks now, really not able to get any clear direction. And it's again, what's sort of odd here is that this had been highly correlated to copper prices, and that correlation is clearly broken down some because it's very clear that copper has moved sharply lower, and we've seen the FTSE continue to hold. So this is a clear divergence, and it could tell us one of two things. The relationship is over, or the FTSE's next significant move is going to be lower to catch down to the move we've seen in copper. And really what it does is it sets up a really easy pattern in the FTSE to potentially trade, because all you really have to do is just play the lower end of the bottoms as support in the 8,125 area and use the upper ends as resist at 8,265. It's almost as if when you get 8,265, you look for it to go down, and when you get 8,120, you just look for it to go up. And when the market decides which way it wants to break, it's going to tell you, and then you could potentially just go with that trend there from there on. Because right now the relationships that have been working really well have completely broken down. When we move over to the NASDAQ had a rough week last week and is attempting to rebound this week, although today that really didn't work out. We can see that the NASDAQ last Wednesday was down 3%. Then it was down another 50 basis points on Thursday and another 1% on Friday. We were up about 1.5% yesterday, but gave some of that back today. What we're looking at right now on the NASDAQ is essentially an index that has some solid resistance areas in it at this 19,970 area. It also looks like we've just put in a reversal pattern on the top, at least at this point, which really made a nice break. And so what this is implying is that we could see, again, with some unfilled gaps down here at 19,200. Additionally, when we look at this, you can see that we're below the 10-day exponential moving average, which again is our indicator for which way the trend is. And when we look at the Bollinger Bands, you can see we're really not in an oversold position. So my thinking here is that as long as we stay below the 19,970 area and we stay below the 10-day exponential moving average, we want to look for the NASDAQ potentially to move lower and refill this gap at 19,200. When we look at the S&P, we also have managed to close below the 10-day exponential moving average now for 4 days, which is also potentially signaling and telling us that there is some sort of change in trend occurring. Again, what we're seeing at this point is support at this region in here around 5,500. A break of 5,500 probably means that we trade down towards 5,450 or so, because again, there's a lot of resistance and support built up in this region. So at this point, until we break through to the downside 5,450, there's a lot of work to still be done in here. I would think that you probably have good resistance up here at 5,600 as well. So right now it does appear that the trend is shifting in the S&P, because the last couple of times we've seen it really trade below the 10-day, and the 10-day act as resistance that has been in connection with changes in trend. The Dow had a really big move last week. We highlighted and talked about it getting to pretty overbought conditions. You can see that we've come back in to the Bollinger Band. We're not overbought anymore. We're using the 10-day exponential moving average as a support level. We're clearly well above the previous highs. So again, this becomes a fairly easy way to think about this, with the 10-day exponential moving average acting as your support level. A break below that opens the door back to 39,600 or so, while as long as you stay above it, you could play for a return to this 41,200 region. Anyway, I hope you find this helpful, and we'll see you again next week. Bye.